Good afternoon, everybody. This afternoon, the time we have together, we're going to talk about the steps and the things you need to consider as you've just started as a business owner. You're starting a new company, the things that you need to keep in mind or address in order to become a successful new contracting business owner. And as we get started, we've got to get the legalese out of the way, first of all. Through the course of this program, at times we'll be discussing not any real specific pricing, but there will be discussions on pricing, and so we must remind everybody that this is a seminar to educate, and we're not looking to set the price of plumbing, heating, cooling services in anywhere, any part of the country. It's for educational purposes only, and any pricing and stuff you see in here is just made up informational only pricing. The other thing that I need to remind everybody of is this is a general overview of a number of topics in the seminar, and so we have a lot of different companies in here. I don't know the specifics of each one of the companies, so you need to consult with your own attorney as well as your own CPA or tax person regarding your specific situation in your company. I'm of course available, but I don't know everybody's specific situation, so you need to refer to your own professionals that you deal with for specific questions about your own company. So now that we've got the disclaimer out of the way, this afternoon we're going to talk about understanding the concept of the E-myth. I'll explain a little bit more about that in a few minutes. And we're going to look at where to begin. Where do you start now that you've started your own company or are going to start your own company? We're going to talk some about business planning, and we'll go through some of the steps to take in that process. And then we'll talk about where you can find some help, resources available. And then at the end, as Wayne alluded to, we should have time for some questions, and we'll take those as we go along. A lot of companies, not just contractors, start their businesses, and before you know it, they're out of business. They close somewhat quickly. I want to share some somewhat startling and frightening statistics about this, not to scare you away, but just to keep you, give you a realistic idea of what's out there. Statistic Brain is a website that did some research, and they researched startup companies and how their existence, how many in this case were still operating after 4 years. If you look, it says percent failed in the first year, 25% of the new startups failed. 36% failed after 2 years. After 3 years, 44%. And then after 4 years, 53% of construction companies failed. So in the first 4 years, based on this research, more than 50% of the construction companies that went into business went out of business. Now, this data doesn't break down specifically into the specialty trades for like plumbing and HVAC, but it still gives us a good enough data reference to show that we have a high failure rate in our industry, and we're only behind retail, which is one that turns over quite a bit. So it's a pretty alarming statistic. In their research from Statistic Brain, the majority of the issues surrounded almost 50% of the companies went out of business went out of business because of incompetence. Not that they didn't know what they were doing when it comes to plumbing or HVAC, but business and managerial incompetence. So things like cash flow problems, ignoring the client's needs, having no planning or poor planning, lack of managerial experience, and not understanding of pricing their service and products in the industry. This statistic really caught me off guard. Frankly, I wasn't aware of this, but the industry with the worst success rate after the 5th year is our industry. This is not a survey where we want to be at the top of the charts, unfortunately. And what's alarming is look at a couple of the businesses or types of businesses below us, and I'm specifically referring to number 3, but more so number 4. Eating places are restaurant establishments. And I bet if in every one of the towns across the country where all the attendees are from, you know at least 1 or 2 restaurants that maybe you used to go to that you don't go to anymore because they're closed. And so to see the statistic that our industry has a worse rate, a higher failure rate than even eating places, restaurants, is pretty alarming. So what are the aspects when you look at going into business for yourself? There's a risk and a reward. Just a few of the risks. The biggest risk really is, like we just mentioned, failure, that it doesn't fail. Tied in with that risk of failure, the biggest thing that's tied along with that is money, meaning losing money. You pour a lot of your money besides your time and effort into a venture, a business venture, and it fails, and it's can be a catastrophic financial event for you and your family. But those are some of the major risks. So why would I want to have my own company? What are the rewards? Well, the biggest one is a financial reward, and those of you that have heard me speak before know I hammer home on this. The primary reason that you go into business for yourself is so you can make more money than you could be for working for somebody else. Because unless you're financially successful in your own company, you're not going to be working less hours. In most cases, you're going to be working more hours. So you're going to have to put, as it says under the risk area, you're going to have to put more time and effort into it. So the biggest reward is the financial rewards. The other aspects of it, you want to challenge, you want to control your own destiny, you want to spend more time with family. Those are all different rewards, but unless the business is performing well financially, you're not going to be able to spend more time with your family, though the business in that case would be quite the challenge. And believe it or not, another aspect of developing your own company and building it up is it's fun. And as a member of a family business, I can tell you, as much as it is a challenge at times, it is a very rewarding, it is a fun experience. So let's look at the big issue that most people have, and this is not just for plumbing and heating contractors or plumbing, or plumbers or HVAC technicians. This goes for accountants. This goes for store clerks. This goes for attorneys. It goes for doctors. And it's all about this concept of the E-Myth. For those of you that are not familiar with the E-Myth is a book written by world-renowned small business consultant Michael Gerber, and his book, The E-Myth Revisited, which is, you can see on the PowerPoint right now. If you are not familiar with this book or you have not read it, I can't strongly recommend enough that you go out and purchase this book. It's $20 to $25, something like that. But it is not a difficult read for those of you that aren't huge readers. It's very well written, and it has real-world experiences in there. And everything that you really ever wanted to learn about business or you needed to know about business, the business side of things, is in that book, believe it or not. So let's talk about what the actual E-Myth is. And here's what it is. The E-Myth is this fatal assumption that just because you understand plumbing, you're a great plumber, or you're a great HVAC technician, or you're a great accountant, just because you're great at the technical work doesn't mean that you're going to be a great manager or owner of a business in that field. So just because you're a great plumber doesn't mean you're going to be a great owner of a plumbing company, because knowing how to test backflows and knowing how to install process piping or medical gas piping or fixtures, what does all that have to do with marketing your business or making sales or paying your bills? All those kind of things, they don't correlate. So just because you're an expert on the technical side does not mean you're going to be good on the business side. And that's what Michael Gerber calls the entrepreneurial seizure, this myth. This is the basis for a lot of this presentation, and it's certainly the basis for Michael's book. There's three components, three personalities, so to speak, that each of us have when we're looking at this from a business standpoint. And usually when it comes to starting your own business, it's you are the technician. And the technician doesn't necessarily mean, as you can see I have it in quotes, it doesn't necessarily mean HVAC technician. Again, it can be whatever your vocation is. For us, obviously, it's plumbers and HVAC technicians. But you have to understand the other aspects of your business. And as I point out here, and this is something I believe with all my heart, is, if your business is depending on you specifically, starting your own business, you're a one-man shop or a one-woman shop, you're out there on your own. As you go along, if your business depends on you to survive, then you don't own the business owns you. All you've done is created a new job for yourself. You've left, you've went out on your own, and all you've done is create another job if you're not looking beyond the stuff in the field and learning the business side of things so you can grow your company. That's our challenge as the technician aspect of it. Now, I mentioned the three components. The other two components that we have as a business owner is we have the manager hat that we wear. And the expertise of the manager is the organizer. So the one that puts everything together. So to make sure that we have the proper inventory of Kohler fixtures in stock, and that we have all our invoice forms that we need, and that we have our inventory organized on our trucks. The manager is the organizer aspect hat that we wear. And finally, the entrepreneur, which is the business owner, which you have taken on as you started your own business. The entrepreneur is the visionary, and I like to think of this as the visionary. The entrepreneur is the dreamer. So where you want to go, where do you want to take this business? This is what I have, this great idea. This is what I want to do. Well, that's how all businesses start. There's some idea or some vision, and that's the entrepreneurial hat or aspect of the business owner that we have. This phrase at the bottom, if you are familiar with Michael Gerber and his book, you take one phrase or quote from his book. Michael always says you work on your business instead of in your business. So what that means is if you're a business owner, your role as the owner is to work on your business. So that means to grow your business, to make it better, rather than just, you can't start your own company and then just go work in a ditch all the time, or go work in a commercial building or a factory where you're running process piping or you're installing fixtures. Yes, you have to work in your business, but you also have to work on it. And that's what Michael hammers home. Work on your business instead of in your business. And that's a different viewpoint than you're used to as you're growing up as a plumber or as an HVAC technician. Okay, so you've started your own company, and you may have had experienced that E-myth, or had the entrepreneurial seizure, but now you've started. So what are the things that I need to accomplish or have accomplished as I started my business? Well, the first thing sounds pretty simple, but it may not be, and that's your name. You have to name your company. Are you going to name it your family name? Is it going to be, like in my family's case, my last name is Bohintz, so are we going to start Bohintz Plumbing and Heating? Or are we going to come up with a different name, Cleveland Plumbing or Ohio Plumbing or what have you? In our case, we went away from the family name. That was my father's decision, and I think partly had to do with the last name, but our company name is Ohio Plumbing. And so where did my dad come up with that? Well, he's like, you know what, I do plumbing business in northern Ohio, and he literally smushed northern and Ohio together and came up with Ohio Plumbing. You do the same in your business. Are you going to use, is it going to be Martin Plumbing and Heating, or is it going to be, citywide heating, air conditioning, and plumbing? So that's the first thing that's important, is to name your business. The next thing you have to do, and this is where I have to strongly encourage you to get legal guidance and legal advice on this, because these aspects of articles of incorporation, if you're going to incorporate any kind of incorporate structure within the state where you have your headquarters, or issue stocks, partnership agreements, all those things, you're going to need an attorney to do that for you. Accountants, tax people, we cannot do that. Accountants don't appreciate when attorneys practice accounting, and same thing, vice versa. Attorneys don't appreciate accountants practicing the legal field, and for multitude of reasons, not having the experience. So, even if you don't, you can't afford a huge lawyer, there's websites out there that offer legal guidance for companies that are just starting out. So make sure that if you haven't already done so, you don't have the legal documentation, get with an attorney and make sure you're properly registered and the proper paperwork is filed with the state that your business is in. Financial issues, getting started, wow, there's all kinds of financial issues that you could have, because if you started your business, I'm pretty sure none of us started our business with $1 million in the bank. Typically, it does not work that way, but you've got to raise capital somehow. But one of the first things I instruct new business owners is make sure you open a separate bank account for the company. And I don't care if you're incorporated or not, every company should have a separate bank account. Why do I say that? Well, a primary reason for that is, and this relates to Uncle Sam, not surprisingly, but you want to have your personal money separate from your business money. Even if you're putting your personal money into your business, you need to have the two accounts separate. You can't commingle the funds. So you want to have a separate bank account. And like I said, it doesn't matter if you're incorporated or not. That's one of the first things I would do. Once you've named your business, I would go to the bank and open a bank account for your company. Then in our industry, of course, we have to make sure, depending on the state that you're in, you have to make sure you have the proper registrations and licensures. So if your state that you are headquartered in requires that you have a state plumbing license or a state contractor's license, like we do here in Ohio, then you have to make sure that you have that if you're going to, if you've started your business or if you're opening a business. It's important to comply with the law. That's another aspect that the attorney can consult with you on to make sure that the proper paperwork is filed with the state if that's required. The other thing that you have to consider at that point is insurance. If we haven't done any work yet, we're not really liable, but you can't go out there unprotected, and I'll talk about that in a minute, why a recommendation that I'm going to make from the accountant's perspective and from a tax perspective. But you have to be properly insured, and any of you that have owned companies for a long time, or maybe are a manager at a company and worked there a long time, you know, we're not talking just workers' compensation, but we're talking liability insurance. You know, maybe one of the plumbers doesn't sweat a fitting completely and the house floods. Well, you have to have insurance protection for that. And with the PHCC, I know Federated has a lot of great programs in that regard. So if you're, that might be something you look at, but you need to have some kind of insurance for your company. So primarily to protect yourself personally and your personal assets. And that's what I am interested in as a consultant or an advisor. I'm looking at what, you know, make sure that you're protected and what your best interests are going in initially. So here's an example, articles of incorporation. You may have to file with your state's Secretary of State's office. The best way you can find that information is go to your state government website and in the search engine look for Secretary of State. Most of the Secretary of State websites that I've seen, including the one here in Ohio, have a whole section devoted just to businesses. So you've started a business, or so you're thinking about it, whatever. It gives you all the information and the documents that you need, that you'll need to file. And so if your attorney doesn't have them, that you have access to those documents and they can help you fill them out. So you've come up with a name and you've opened a bank account. This is the big thing that I was referring to a minute ago, and that's you have to choose what type of company you're going to be. And I'm not referring to, are you going to be a plumbing company or heating and air conditioning company? I'm referring, are you going to be a sole proprietorship? Are you going to be a C Corp, an S Corp, a partnership, an LLC? You know, some of these terms you might not even ever have heard of before. So here are the types of companies that we're going to look at. Each entity structure, each one has different advantages and different disadvantages. Now, most of what I'm going to be looking at and talking about today are the tax aspects of things, but I will point out a few general things that you can confirm with, from the legal side, that you can confirm with your attorneys. So here's a chart, and it's got some different aspects of the business. Let me just say, in an overview, I strongly encourage you, if you are a business and you're in business for yourself or your family, and you are the sole proprietorship. Now, what does sole proprietorship mean? Well, that means tax-wise, when you file your tax return for your company, you're filing it on Schedule C of your 1040. So if you are a sole proprietorship, I strongly encourage you from an accounting and tax standpoint to set yourself up with some type of corporate structure or limited liability company, limited liability partnership. And why do I say that? It's the very first line at the top, limited liability for owners, each type of entity. Limited liability for a sole proprietorship? Nope. No protection. Unlimited liability. Partnership, if you're a general partner in a partnership, they're the only other individuals that do not have, or that do not have protection from a liability standpoint. Now, what do I mean by this? You start your company and you open up a bank account, you get some insurance, and you set up as a sole proprietorship, you hang your shack out, you pass out some business cards, and you start doing work. And let's just say, for purposes of this discussion, you do a remodel in a house, and it's just you, and you have, for whatever reason, you've tested the plumbing in the remodel tested fine, but a leak springs up on a joint that you made on a copper line installation, and it floods the house. And not only does it flood the house, but it causes a mold problem behind the walls that's not initially recovered. You've got some serious exposure there. Well, let's say you've got commercial insurance for $250,000, let's say, and that policy gets maxed out, and the claim is for more than $250,000. Because you're a sole proprietor, the insurance company or the house where you did the remodeling, the family you did remodeling, whoever, they can go after any assets you have. Not just any assets of ABC Plumbing, Heating, and Cooling, but any assets of Mike Bohentz, owner of ABC Plumbing, Heating, and Cooling. Because I didn't get some kind of corporate structure, I'm a sole proprietor. They can take my personal assets. So they can take my house, they can take my car, all of that. And so that's why, if you're a sole proprietor, I highly recommend that you consult with an attorney quickly. And I don't really, in that regard, I don't care what kind of structure you have around you. Like I said, there's benefits to being a C Corp versus an S versus an LLC. But really, in no case do you win being a sole proprietor from a tax or legal standpoint. So I won't, these slides are going to be available afterwards, and Wayne has a copy, the national office has a copy. I will make sure that if you don't get it from them, you can get an email, my email address at the end. I will be glad to send you the slide deck so you can look at this slide specifically in much more detail. But it gives you the positives and the negatives and different aspects of the entity choice. Just a couple I'll quickly point out. Double taxation of income. Well, do you have that in sole proprietorship? No, you don't, because you just have it on your own individual return. Do you have it on your S Corp? Do you get double taxed? No, because an S Corp is a pass-through entity, the same as an LLC. And a pass-through entity just means that the corporate results pass through to the owners or the partners or the members of that company. C corporations, traditional corporations, have double taxation of income. They're the big ones, you know. If you, they pay corporate tax and then they pay out a dividend. So you own your own company, you're a C Corp, and you paid income tax for the company on the money that you made, and then you declare a dividend, so you pay yourself a dividend. Well, a dividend gets taxed again on your personal return. So C Corps have double taxation, where S Corps and LLCs do not. The last one I'll point out, because it's become a hot button issue recently, and that's unreasonable compensation. If you look for a C Corp, unreasonable compensation is an issue if it's unreasonably high. So, and the way the wording popped out there, it's not unreasonably high challenge. That should say, yes, it's unreasonably high, it'll be challenged. S Corp, and I know there's a lot of S Corps in the PHCC, unreasonably low compensation will be challenged, and you could get audited by the IRS. And we don't have the details to go into it today, but essentially what it is you'll see a lot of owners try to skirt the system, so to speak, and maybe minimize, I'll put in air quotes, payroll taxes. So they pay themselves a very low salary and a real high payout in dividends or something. And so they avoid all the payroll taxes and the workers' comp premiums and all that goes with it. So the IRS is onto this, and they've made this an area of enforcement in the last couple years. All right, so the next thing that we need in starting our company, or if you've already started it and you don't have this, is a business plan. I call it a game plan. And I will tell you this, my experience has been that 9 out of 10 companies, whether they're a startup or whether they've been around 40 years, fortunately been around 40 years, 1 out of 10 has a business plan. Only 1 out of 10. And as we go along here, I'll just say that this is the #1 reason in my mind why businesses fail, is because they don't have a game plan from the start. And you'll see a couple of these steps seem kind of wishy-washy, like philosophical kind of thing. Well, I can't really put my hands around that. I go to hug it. It's like hugging air. And those are the first couple steps of the plan, but there's a reason for them. And so it's important to go through this process and develop your plan based on these 7 steps. So let's look at the first few, and these are the ones that most people tell me, well, Mike, it's kind of like hugging air. I kind of can't get my hands around it. It's not something firm I can grasp on. And a mission statement, basically, it says, why are you in business? Okay? What is it that you're going to do? Well, we're going to do plumbing. We're going to do heating and air conditioning. Okay, why? Who are we going to do it for? And why should they choose us over somebody else? You know, it's all of us had this entrepreneurial seizure at one point, and we had this idea of what we were going to do. The problem is, at least 9 out of 10 of us didn't write it down, and that's what this process makes us do. So the mission statement is write it, put it in writing. What are your goals and objectives? What is your vision, your plan for this business? And along those lines comes the vision statement. Okay, what is your company going to look like? Okay, how many trucks? You know, where are you going to be 5 years from now? How is it going to look? You know, what are you going to do? How are you going to do it? What's the process? When is it going to be done by? Goals with deadlines. So these are 2 things that we think a lot about, but we never wrote down. You have to write them down. And finally, the company values. Okay, you know, philosophies, beliefs, principles that guide the company's conduct. Our family business, my dad's always said, and it's a lot of people go by this, just treat others like you expect to be treated. Treat them with respect, even when they don't necessarily treat you with respect. Okay, but you're always upfront, honest, fair, ethical, all those things, whatever your values are, your personal values. And because when you start a company or you started your own company, your company typically takes on a lot of the values and ethics of the owner. And so that would be your own personal beliefs and values. So you know what they are, you think about them a lot, you just don't write them down. Well, now this process of developing a business plan forces us to put it in writing. The next step in the process is SWOT analysis. And what SWOT stands for is strengths, weaknesses, opportunities, and threats. And as you can see on the slide, there's a 4-box chart here. And basically you write out, okay, what are the strengths of ABC, plumbing, heating, and air conditioning? What are my strengths? What are our company's strengths? We're really good with customer service. We always call when we're on our way. We're responsive to our clients' needs. We offer 24-hour service. Where are our weaknesses? Well, you know, our inventory setup could be better. We seem to be running out of parts occasionally, and so a guy has to run to the supply house and pick up, you know, a fitting or a fixture. Well, that's kind of an area where we're weak. So you have to be brutally honest with yourself. What are your strong points? What are your areas of weakness? And then you look outside your company, okay, and look out into the community, okay? What are the opportunities that are out there for our business? Are there geographic opportunities where we can expand our company? Maybe there are new product lines we could take on. Maybe you're just doing plumbing right now and hydronic heating and you want to get into heating and air conditioning. Are there opportunities there? Are there opportunities to acquire other companies? What are the threats? You know, who are your competitors out there? What do they do better than you do or I do? And are they after the same target client, target customer? I'll talk about that a little bit more in a minute. But again, put it in writing. The nice thing now is, you know, 20, 30 years ago, you had to put this all down, pen and pencil and paper. Now you've got software programs that will walk you through this process, or spreadsheets and that where you can just type it in, so it makes it a little bit easier. But you have to put the finger to the keyboard or the pen to the paper and document your strengths, weaknesses, opportunities, and threats. What are your goals and objectives for the company? Okay, I love this one because I do with some companies, and they're looking at hiring, people and questions, or I know I've been through this before. Maybe you have too. When you go to an interview, where do you see yourself with the ABC Plumbing Heating Company from 5 years from now? Where do you see yourself from 5 years from now? Well, we do the same thing with our company, and that's what the business plan. Where do we see the company? Where do we see ABC Plumbing, Heating, and Cooling 5 years from now? 10 years from now? Geez, Mike, I'm just hoping we can make payroll this week and I can live to see next week. That's great, and I'm sure that happens, but we also have to be looking down the road. We have to look short-term and long-term. So what's the company going to look like 5 years from now? What are we going to be doing? How big are we going to be? All those kind of things. Now, I make a point here about goals. I want to be a bigger company, or I want to have more money 5 years from now. Is that a goal? Kind of, sort of, but not really, because goals have to be specific. I want to be a 5-truck, $3 million company within 2 years, or I want to go from $5 million to $10 million, in the next 3 years as far as sales go. Or I want to add heating and air conditioning to my company and have 2 heating and air conditioning service trucks on the road within the next 12 months. So the goal's got to be specific. And I want you to be optimistic, but the accountant in me comes out and also says, but you need to be realistic. So if I said today that I'm going to start a plumbing, heating, cooling company today, and a year from now I expect to be a $10 million company with 40 trucks, I better either win the lottery, come into a lot of money somehow, because that's a real unrealistic goal in such a short time frame. So yes, optimistic, but be realistic too. And then be detailed in your goals. So be specific and be detailed. And again, it's writing them down, documenting them. So if we have it in writing, we can see it, and even if it changes, we at least have it in writing, because we'll have this whole plan, and it doesn't mean it's going to, 6 months from now, the plan could possibly be out the window. We're not going to throw it out the window, but it might need adjustments or adaptions, and we'll do that. So once you've done your strengths, weaknesses, opportunities, and threats, and then you've done your goals and objectives, now you have to look at the specific aspects, parts of your plan, of your business plan. Operating plan, that's the actual field operations, just like you would think, plumbing and heating. So it's the inventory, it's who's going to do, what kind of work are we going to do, who are we going to serve, what type of trucks are we going to run, all those kind of things. That's the operating aspect, and that's one plan. That's a plan in itself, but it's a subset of our bigger business plan. Then you have the marketing plan, and the marketing plan is all about just what it says, marketing, sales, okay? It's going to focus on how we're going to market our business. Who are we going to market our company to? Everybody? We're going to ABC Plumbing, Heating, and Air Conditioning. We work for everybody? We know that's not true, right? All of us that are business owners, hopefully you get a chuckle out of that, because there's types of people or types of businesses we don't work for because they're not our target market. So our marketing plan, we sit and we target we define our target market. And I don't just say, okay, I'm targeting residential homeowners within 20-mile radius of our shop whose house is worth $250,000 and up, making $75,000 plus a year. That's great. Those demographics are important, but it's also, what does he or she look like? Okay? Do do they have kids in school? Do they support the schools? Do they go to their kids' events, plays or games, those kind of things? Where do they shop? Why do we want to know that stuff? Well, we want to know that because the more we know about our target customer, the more we can target our marketing to them. So that's just a real quick specific point on marketing, okay? And then we have to decide also, okay, how are we going to reach these? What are we going to do? Are we going to do home shows? Are we going to do grocery pad lists? Are we going to sponsor Little League teams? What's our unique selling proposition? What makes us different from everybody else? Just one pops into my head right away. Burger King, have it your way, the old slogan. What did that mean? Well, that their unique selling proposition for hamburgers was, you can have it your way. It's not pre-made. We'll make it any way you want it compared to some of the other ones. So what is ABC Plumbing, Heating, and Cooling's, what's the unique selling proposition for the company? And then the other aspect of it as well is we have to look at the costs. What is the financial aspect of the marketing plan? What are those going to cost? What are all the strategies and things that we do? What are they going to cost? Now, of course, here's the accountant's favorite aspect of the business plan. That's the financial plan, okay? And this is the aspect of the plan. It focuses, obviously, on the financial aspects of the company. Now, we're not just talking about the traditional balance sheet, income statement, and statement of cash flows that all of us get or should be getting from our bookkeepers or our outside CPA companies every year. It's not just historical data, okay? This is a business plan. So what's a business plan? We're looking ahead, right? We're looking into a future. Where are we going to be 5 years from now? Well, that's great that we have our income statement, but that's for last year or last month. And our balance sheet only tells us where we are right now. It doesn't tell us where we are 12 months from now or 5 years from now. So not only do we have to have the financial data historical from before, we also have to look ahead. So we have to have forecasted financial statements. So it's more detailed financial information. So we're going to execute this marketing plan, and so our business is going to grow 25% this year. So 12 months from now, our balance sheet is going to look like this. Our income statement is expected to be this. So we're also looking at forecasted financial statements. We're also analyzing data going forward, KPIs, which are key performance indicators. We should be including those in our financial plan, the popular ones, the ones we know in our industry. What's our conversion rate on calls from just going out for a service call fee or actually doing our work? What's our conversion rate on that? What's our average sale? What's the average number of hours we sell on a job, or the average number of tasks we sell on a job? What's the average dollar amount of sale we do in a remodel or a commercial project? All these key performance indicators also are included in our financial plan. Now, again, the main thing here is you want to be realistic. We can't go pie in the sky with the financial projections, and in most cases you will have a bookkeeper or an accountant like myself doing your financial projections, and we take the conservatism approach. So, and a lot of people say it's a negative approach, but we kind of look at things, what's the worst case scenario? Okay, our worst case scenario is we overstate our expenses, we understate our income. So that's the worst that can happen. And then we basically back off from there. But our projections need to be realistic. Now, one aspect of the financial plan, and this is a great point to talk about it, is pricing strategies. And I'm just going to go through pretty quickly here because we don't have a lot of time. A few of the slides that are part of another program that the Educational Foundation puts on called the Understanding Overhead Program. And that seminar, program, and webinar process, that all takes you through the process of, okay, you're in business for yourself. What am I going to charge? How am I going to come up with what my selling price is? So that seminar and a whole group of slides walk you through that process. And the first thing we have to do is we got to figure out what it costs us to be in business. And if you're paying a plumber 20 or 25 bucks an hour, or you're paying yourself 20 or 25 bucks an hour on a weekly basis, you know that there's other costs involved. You know, there's taxes and workers' comp and health insurance, benefits, all those kind of things, the truck, the fuel for the truck. All those costs make up, you know, what it costs us to be in business, and we have to include every single cost in our pricing. Otherwise, we'll be out of business. We won't make it to that 5th year, as that statistic showed earlier. So this program that the foundation has walks you through this whole process and also teaches you how to properly calculate a selling price to make a profit. Now, this slide here, there's an overhead and profit calculator that the Educational Foundation has put together and developed. If you don't have it, you should have it. I'm not going to make a big sales pitch for it. I don't get anything out of it. I think it's about the greatest thing that's out there, especially for the price. It's around $250, I believe, for the PHCC overhead and profit calculator, and I've told Cindy and the staff many times that it should be they should be charging at least 3 times that, because it's worth at least 3 times that. If you're interested in it, you can let Wayne or somebody at the office know, or let me know. But these are just a few of the slides from the Understanding Overhead Seminar, because properly pricing our services and our products are an important aspect of us starting our business. Now, don't go it alone. I don't want you to do this all by yourself, okay? Similar to the Avengers, you're going to assemble a team, okay? And each member of our team is going to have special powers. It's just like the Avengers. So you're going to have the CPA, and the CPA is going to handle all your tax aspects and your financial aspects. Your attorney is going to protect you with the shield, is going to protect you legally. Your banker is going to, come with his or her superpowers. Same thing with insurance agent and a consultant or coach. Briefly, I want to mention the role of the mentor, and I think that's probably one of the biggest things that we can do as a and we have a ton of them in the PHCC, thankfully. If you just started your business and you're a one-man, one-woman shop, and you want to grow your company but you don't know who to turn to, there are a lot of wonderful and helpful people in the PHCC that may or may not be a competitor of yours that are willing to help you. That's one of the best things that I love about the PHCC, is that there's a lot of great people, and that's what we are, people that just happen to be contractors that are willing to help each other and make us better companies and grow our companies. So I think it's great and important to have a mentor as you grow your business. The last step in the process, which is a big one, and it's much more evolved than one slide, is you have to have the business system set up and the processes and procedures in your company. This is just a little wheel picture that explains the process. So let's just say we're going to set the process for how we answer the phones at our company. So that's our process. So what are our standards of answering the phone? Well, okay, our standards are, we're going to answer the phone with, between the second and third ring. We're going to say, good morning, good afternoon, thank you for choosing ABC Plumbing, Heating, and Cooling. This is Mike. How may I help you today? We're going to, speak in a pleasant voice. We're going to use a headset, or we're going to use the phone. We set our standards, okay? And then accountability. Well, what's the accountability going to be? Well, we're going to record all our incoming phone calls. Just like if you've ever called a customer service department for a lot of those large international companies, what is one of the first things they say? This phone call may be recorded for training purposes. So same thing, we would do that in our company, so we'd set accountability. What are our benchmarks going to be? Well, we would look at our KPIs. What closing rate, number of phone calls come in with problems versus the number of phone calls booked. What's the after service evaluation. What the person on the phone, after we did the service, how did they rate how we answered the phone and the person on the phone, etc. And then the last step in the process is you review and evaluate it. Okay, and if there's a problem, so if your conversion rate is too low, maybe that kicks out as a benchmark. Well, now you've got to come up with a corrective action plan. So you sit down and develop that, and then you review and evaluate it, then you put it back into the system, and the wheel starts again. You start the whole process again. Initially, getting this wheel to turn is very difficult. I understand that. But you don't have to reinvent the wheel. That's one of the things that I want to make sure that I explain this afternoon, because there are a lot of great organizations out there, starting with the one that we're all members of already, that have subgroupings, like if you're in new construction, for Construction Contractors Alliance, or the Quality Service Contractors for those of us that are service and repair companies, that have systems and programs that you can take and implement in your own company. So, you know, Mike, I didn't get into plumbing to sit and develop a business plan. I understand that, you're right, but you have to have a business plan. But you don't have to reinvent the wheel. In most cases, almost everything's already been developed out there. So you can go to this resource or that resource for help and get the system, or have the system, get help to get it installed in your company. And like I said, I would start right within the PHCC itself. You've got some other great groups out there, like the U.S. Chamber of Commerce, your local Chamber of Commerce, SCORE, grouping of retired executives that donate their time to help businesses grow. They're retired, they want to stay active, they help businesses grow. And like I mentioned before, coaching, mentoring. Mentor is the biggest one for me. There's a lot of great people in this group, and there's a lot of great people that are successful and willing to share. So find yourself, if you're just starting out, find yourself a mentor that will help you, and as well as if you want to get a business coach or an advisor like myself, that's you're welcome. That's a fine thing to do that as well. But I would find another member of the PHCC that's willing to listen to you and offer you some guidance, because there's a lot of people out there willing to do that. The keys to being a success, like I said, I just expounded on it. Seek out a mentor. Find a mentor. And frankly, maybe it's not a plumbing, heating, and cooling contractor. Maybe they're not a member of the PHCC because they're not a PHCC contractor. Maybe it's a restaurant, or it's a banker, or it's a manufacturer, through a networking group, or through your Chamber of Commerce. There's a lot of great business mentors out there that aren't in our industry, but a lot of the business aspects are the same. Just what we do is different, but a lot of the business side of it is similar or the same. So there's a lot of benefit we can get there from having a mentor outside the industry. Join a group, whether it's a networking group. Obviously, you're members of the PHCC. Maybe you join QSC or CCA. Find a coach. Not as familiar, I apologize, with CCA as I am with QSC. I know QSC has business coaches and trainers willing to work with their members. Have a detailed business plan. That's the number one thing. Number one thing to be a success, have a detailed business plan. Without fail, the companies that I know and I've worked with that have detailed business plans are the ones that are succeeding. And by succeeding, meaning I'm saying they're having 20 to 25% and higher annual growth rate in their business, not just top line, but their bottom line. And their bottom line profits are 15 to 20 to 25% net profit after taxes, and after paying themselves a great salary with great benefits, including retirement, retirement plan contributions. And that's because they have a detailed business plan and they're following it. And then finally, watching closely the KPIs. Yes, that's an accountant's thing, but watch your average sale, watch your conversion rate, all those kind of things, because they impact, one change, and it could even be somewhat small change in one number, like your close rate, could have a dramatic impact, positively or negatively, on the financial results of your business. And then on a regular basis, review your plans and your systems, whether that's monthly or annually. And that, as this cartoon says in a nutshell, that's, in simple terms, how you start a small business.